Hi, good morning. It's Mary Ellen McGonagle, and you are watching the MEM Edge Show. And this is the show where we put you in front of stocks on the move. We're on the lookout for those big winners with high growth prospects that can really provide extra good returns. And let's take a look at what we are going to be reviewing today. Of course, this is Mary Ellen McGonagle, and we have a lot that we are going to be covering today. First, as always, we're going to take a review of the current markets. Get an overview, get a feel for where we are. Of course, you do always want to have the strength of the broader markets behind you before you put your money to work for you. And then secondly, we're going to take a look at pockets of strength within a rotating market. And I will tell you in particular, September, we did eke out some fairly okay returns. S&P was up about a half of a percentage point. And historically, that September period can be a very tough time for the broader markets, but we were able to see some gains. And within the markets during that month, we did see a little bit in the way of rotation. We saw recently strong areas of the market fade back, recently weaker areas come into favor. And so we can take a look at that and see where underneath all of that movement, where pockets of strength are and appear poised to continue. And it's always with an eye toward outperformance. That's what we are looking for. We want to be able to identify that strength and outperformance and uncover a way to capitalize on that. So we'll go ahead and take a look at that. And then also taking a look at yields, stocks that provide a yield to balance potential volatility. Now, this is an area that I do not generally focus on. I'm always normally on the prowl for high growth stocks. I want these big, fast movers. However, more recently here in the broader markets, we've seen a bit more in the way of volatility. Certainly September, I talked about that move in and out of various industry groupings. So there may be some of you that want to seek stocks that can provide a little bit of a net, if you will. So we'll go ahead and take a look at some yield stocks that are also growers. So you're getting that balance there. And then lastly, growth areas that are also viewed as defensive. And this is another area with an eye toward those of you that may be a little unsettled with where we are in the broader markets. We are continuing to march to new highs, and you want to take a balance out your holdings, your portfolio, and take a look at some stocks that have those growth characteristics, but they're also viewed as defensive. So as we move forward, this will make more sense to you. Let's go ahead and take a quick look at the broader markets. Here we're looking at a daily chart, and this is the S&P 500 Large Cap Index. And for this index, when I'm examining the S&P and I'm uncovering whether the markets remain in an uptrend, I like to use these simple moving averages. And this green line here is just that. This is a 21-day simple moving average. And quite simply, it's a smoothed out line that's depicting the average price over the last 21 days. And you can see how it can act as support for this S&P 500. And you want to pay attention not only to the price of the S&P relative to this 21-day, but you also want to look at the slope of the 21-day simple moving average. And we can see that it has been and remains in an uptrend. This is as of the close last Friday. So based on this analysis, the S&P is in an uptrend and near-term uptrend, and it is finding support at this upward trending 21-day simple moving average. So that's bullish. We have the broader markets acting and behaving in a constructive fashion. So we have that behind us. Now let's go ahead and take a look at a couple of ways that we can identify and uncover where the strength is in the broader markets. This is also with stockcharts.com, and this is an area that you can you can access this from the initial interface page of stockcharts.com, and it's called Candle Glance. And what it's providing you with is a 2-month daily chart of really whatever stock put in here. So down below is where you input those ticker symbols. And as always for today, I have each of the major broader indexes, the Russell 2000, the NASDAQ S&P, and the Dow Jones Industrial. And then from there, I like to populate it with the major sector groupings so that we can really get a sense within that broader market where the strength is. And from there, I have put in the energy technology is XLK, and I have the consumer cyclicals, XLY, and so forth. We're going to review these quite briefly, but from there you can overlay an indicator of your choice. And I like to use the RSI, that is a relative strength indicator, all with an I, that's a momentum indicator, all with an I for trying to uncover, again, where that current strength is in the broader markets, then sorting that by descending. And so we're going to get strength to weakness. Upper left strength, lower right is going to be your weakest area. So let's take a look. Healthcare is continuing. For those of you who've been following this show weekly, you'll know that healthcare has been in the upper quartile and in the front part of showing us strength, and it continues to power to new highs. It's one of two indexes that are currently close to or at new highs. So healthcare continues to show really super strength as far as underlying. We'll dig into that as we move forward. Energy is a newer one up to this forefront as far as showing strength, and that has everything to do with the price of oil, and the energy stocks oil related are really hitting a couple of them are really outperforming the broader markets, followed by technology and then consumer cyclicals. So I would call healthcare, consumer cyclical, and technology, I like to call them the three horsemen. These are the three sectors that really, for most of 2018, have been in the forefront. They've been in leadership positions, and it is very constructive that they remain in the forefront because you want that leadership to carry on and continue. As we move down, HACK is an ETF for security related computer software stocks. And so that's been moving up to the forefront as well. And take a look at financials. That area, it has been just really hammered. A lot of that is related to bank stocks, which comprise a large part of the financials, but also they've been the weakest part of the financials. There are pockets of strength within financials that we we'll go ahead and take a look at, because we are going to be looking at pockets of strength within these sectors that are starting to kind of formulate and starting to see a bit of movement. Industrials had moved to the forefront. They fell back last week with trade war tensions. Today they are picking up a bit. So in fact, I'm just going to take a minute here and update it, because that was as of the close on Friday, and then go ahead and hit it and get an updated version, and we can see very, very similar dynamics. Energy moving up even further to the forefront. The group is up 1% so far today. So let's go ahead with stockcharts.com. I'll show you some very easy ways to get your arms around the strength within these given sectors. I'm going to go ahead to Stock Charts main page. We're going to take a look at this sector summary, and from there we can very simply drill down not only to subgroupings but also individual stocks. So what I'm showing you now is really quite powerful and actually quite simple. It's something that you can do on an intraday basis. I like to look at it on a weekly basis, just get a broader view. Is the strength really there? So we can see this is the healthcare sector fund, XLV. From here, you can go ahead and click on to that sector name, and from there, it will outline really where the strength has and currently is over the last week. And biotech stocks really are in the forefront. They have come into their own over the last, I would say, week and a half, but it is a movement worth noting. Within the broader markets, there are over 500 biotechnology stocks, and within that, any number of them are getting FDA clearance for new cutting-edge drugs on a regular basis. So let's go ahead into that industry grouping, and from here, you are going to want to use this SCTR. That's your scooter rating, and if you go ahead and sort that, the higher the number, the better. This is a very unique technical uh, indicator, if you will, that was developed by John Murphy with stockcharts.com. Super, super powerful because it's going to point you immediately to the better performing stocks. And from here, you can simply hover over that ticker symbol to get a look at the stocks. I tend to, certainly within biotechs, I tend to look at larger cap stocks simply because these companies are going to be better positioned as far as product pipelines and earnings. So we can just take a quick look here at Illumina, ILMN. This is a stock with my MEM Edge weekly report that we've had highlighted for quite some time. And we're looking at a daily price chart. Now we have the 10-day simple moving average. That's a better moving average for these faster moving stocks. So you can see that ILMN is continuing to find support at an upward trending 10-day simple moving average. And for those of you that might look at this chart and say, well, where were you back here? Certainly those that follow me and my work, we have been in this stock for some time. But my bigger point is that the stock, while it has advanced here for quite some time, oftentimes your biggest and more certainly more profitable and your really big winners, they will go on to advance provided that their earnings and revenue outlook remain strong, often for at least 18 months or more. So this certainly would be a stock that you would want to have on your radar, even though it already has had a fairly significant advance. It does appear currently poised for further upside. Your RSI here on the top is trending upward. That's another indicator that I like to use. And then the MACD, another momentum indicator, the black line up through the red, that's a positive signal crossover, and it's above this net neutral zero. So a very positive stock. So we've been able very quickly to assess within healthcare where the strength is and then identify a potential candidate. And there certainly are other pockets and areas of strength within healthcare. But let's go ahead and take a look at another area. I mentioned to you, we can very quickly take a look at financials because that's an area that, as mentioned, has really been hit hard despite increase in interest rates. But let's take a look because there is, in fact, one area that is outperforming the broader markets, and hopefully I can uncover it. But let me go ahead and show you the ticker symbol of some of these stocks that are considered financials but are not in the banking space. And these are payment processors. We're in a period of the broader markets where consumer confidence is at an 18-year high. A number of consumer-related stocks are performing quite well. And as such, there's a need to process the payment for all of these, whether it's services or retail products. And this is an example, GPN, Global Payment. And you can see, again, the 10-day simple moving average, the stock is finding support, and it is now coming potentially out of a flat base building period. SQ is another one. This stock popped last week. This is Square, another payment processor. and they are good for mobile payments. They've just entered into the restaurant space as far as the ability to use SQ for delivery of food products and so forth. So that's an area within financials that, even though the broader sector is really deteriorating, there are actual pockets of strength. So let's go ahead, and there was one other area within biotechs. I just wanted to spend a minute or two. For those of you that follow the markets really actively, you may have noticed a pickup in cannabis-related stocks, and a lot of these are Canadian based, but they are actually they have representation on the US markets. Here's an example. This is Tilray. This particular stock, on this day, actually, it had advanced as much as 100% and then pulled back and gave back 40%, but it was still up 60% on the day. The point is, it's been a very fast moving, more active than normal area. In fact, Tilray's up 13% today, and there are any number of other examples. This is Kronos, CRON. This is up 5% today. But for those of you that might not have the stomach for the volatility in these, they are listed as biotech stocks. We can take a look. I was going to share with you two different ETFs that focus on the Canadian cannabis market, because they are going to be voting in about 2 weeks here to, it looks all but done, that they are going to legalize the recreational use of cannabis. And that's really going to blow the doors open as far as the market there. So here's one ETF that you can keep on your radar screen. This is MJ, and it's not going to be as dynamic. You can see it's up 2.6% today relative to those two stocks that we just viewed, but it certainly would be one where you could maybe sleep a little better at night. HMLSF is another ETF, Horizons Marijuana Life Sciences ETF. So those are two that I thought I would cover again when drilling down and looking at pockets of strength within a given sector. Now let's go ahead and move on. I talked about the ability to uncover stocks that are growth stocks, but they are also providing you with a yield. And in some cases, the yield is going to be modest. But let's go ahead, and as a matter of fact, what I did want to do very quickly is drill down again into that sector area. And this will make sense to you, because I'm going to show you within the industrials. That's an area that has been back and forth relative to where we are with trade war tensions. But there has been one area of consistent outperformance regardless here recently. And we're looking at the intraday. We can also take a look at the 1 week, and that is aerospace and defense related stocks. And a lot of that has to do, particularly within the US. Trump has signed yet another defense related bill where we are going to be in 2019. There's an anticipation of a spend that is going to be record high for defense related spending. So within these defense related stocks, there are a number that provide you with a little bit of a yield, but you're also getting some of that growth. So what we can do is now from here drill down and take a look at some of these stocks. Here's Lockheed Martin, LMT. So let's take a look at this particular chart, and I can provide you with more in the way of insights. This, of course, is not a pretty picture here, but what we're focused on now is this recent relative outperformance. We have a stock that broke out of a base here and is continuing to pretty much power to new highs. It's finding support at this upward trending 10-day simple moving average. Your RSI is in an uptrend, as is your MACD. So let's take a look. I dug in, did a little bit of work as far as the backdrop with Lockheed Martin. This company is the #1 U.S. defense contractor. And last Friday, they signed a huge $11 billion contract with the Pentagon. And it was upon Lockheed Martin reduced the cost of their jets by 5%, which is huge, but it's also going to help them expand their markets globally, even outside of the US. The stock offers a 2.5% yield, and the earnings estimates for this year are 27% earnings growth over last year and 12% earnings growth into next year on a year-over-year basis, and analysts are continuing to revise the earnings estimates higher for this stock. Currently, it's trading at $347. It does have a price target as high as $400 with analysts. And if you look at it on the weekly, you can see it's an even more attractive stock, because I like to look at stocks that are poised to break out of these bases. And this is a saucer type base, and we are very close to breaking out of a 10-month base, which is another bullish factor. Let's go ahead and move outside of defense related and take a look at within the consumer space. There has been a couple of areas there have been as far as pockets of strength, and particularly as it relates to retail. A lot of these apparel retailers have really been outpacing the broader markets. We can take a look at Lululemon. You can see what a big winner this stock. They provide athletic wear, and we can take a look at Canada Goose Holdings. This is a little bit harder to see, but last week it was up 10%, has been a big winner. But we want to look at stocks within apparel space that offer a yield. And so we can take a look at VFC is the ticker symbol. We'll go ahead and pull up a daily price chart as well. And this is BF Corp, and they are manufacturers of apparel products. The stock does have a 2% yield. And what we can look at here is back in July, this activity was based on the release of a very strong earnings report. So the company powered to new highs. And what we are looking at here is a company where analysts are continuing to revise the earnings estimates higher. What I like about this stock is after hitting a new high in the beginning of August, it has pulled back, and this is in line with a lot of apparel-related stocks, pulled back to this upward trending 50-day simple moving average. That's your red line. Very, very orderly pullback, and what we are seeing now is a bounce off of that upward trending 50-day. Your RSI is positive. Your MACD is just turning into positive territory. So this is a very attractive stock that also offers that 2% yield. Let's take a look at a stock that is a little bit smaller, but it offers an even higher yield. This is TGLS, not as well known, but the company is called Techno Glass, and they offer a 5.7% yield. It is quite small. It's only 365 million as far as the market cap, so you can see that it does tend to bounce around a bit more, but we have seen a pickup in the volume here. And as I may have mentioned, they provide tempered glass products in the construction space. We did have new home sales pick up a bit in their report last week, but also Hurricane Florence, they've seen a pickup in these types of construction related materials. They're on track to earn this year earnings that are 186% greater than last year. They did recently report earnings here that were 53% greater than estimates. But again, the company does have a 5.7% yield. And I'm not sure if I have time to take a look at some of these others, but I did want to also point out within the biotech stocks, we talked about biotechs outpacing the broader markets. What we can do here is take a quick look at Amgen, and this is one of the larger, I mentioned to you earlier that I like to traffic and look at some of these larger biotechs. Amgen is certainly one of the bellwether larger names. You can see that it is in a very confirmed uptrend here, finding support at an upward trending 10-day simple moving average. RSI and MACD are positive. Amgen offers a 2.5% yield, and we'll take a look at one more here because I have other areas that I want to get into, and this is Gilead, G-I-L-D, and this is another one that's in a recent uptrend poised to, and it's today breaking out of this base. RSI and MACD is just turning positive, and the stock offers a 3% dividend. One other area as we move forward is that I talked about looking at areas of the market that are viewed as defensive, and certainly healthcare would fall into that category. And the primary reason is because whether we see trade war tensions or a pushback from higher interest rates, or even any signs of a weakening economy, healthcare stocks generally are going to continue to outperform the broader markets. And the primary reason is that there is going to remain a need for those drugs, for those cutting edge medical products, regardless of those tension related headlines that may come forth. So within healthcare, we did talk about some of these biotech, more established biotech stocks. Let's take a look very quickly within stockcharts.com, and we can take a look at the healthcare sector. And there are two areas that have been standing out as far as showing strength. And we can go ahead and drill down into healthcare. Of course, you will see biotechs show up initially, but then if we go ahead and broaden that out, you'll see other areas that have been and continue to do really well. So we can look at certainly medical equipment has been on an 18-month tear at the very least. Let's take a look at pharmaceuticals because, again, looking at stocks that are a bit defensive in nature, we can then sort this by market cap. And one of the stocks I did want to go ahead and point you toward is, let's take a look at some of these larger stocks, and we can see as a, for instance, Eli Lilly, LLY. And this is a stock that had a major advance here, not only earnings, but FDA approval related. It's been in a back and fill flat base here for well over 2 months. And there is an expectation at some point that the stock could break out of this flat base. So keep an eye out for this potentially positive crossover on the RSI. The RSI is already positive, but we want to see a crossover positively on that MACD. So that was a stock. And then very quickly, another area, it may surprise you, but it is defensive. If I don't get into this now, I will go ahead and review it further next week, but it is computer software. A lot of people would not think of that as defensive, but the primary reason is because oftentimes these computer software companies are providing a service, and they have contracts with their clients where their clients are paying them either on a weekly, not weekly, but in some cases monthly, and then certainly annually. So a lot of times these contracts, it is viewed as recurring revenue within these technology and in particular software stocks. So this is another area that I would point you toward as looking for stocks that certainly are giving you not only that growth, but that defensive area. So we can take a look at CRM is a big one. This is Salesforce.com. They work with certainly a lot of corporations that, again, have these contracts in place where they are going to continue to get this recurring revenue. Again, I will get more into this next week. Those with more questions can visit me at MEM Investment Research. Go ahead and contact me if you'd like further elaboration. And you can also take a look at some of the products and services that can help expand your knowledge even further as far as the broader markets, how to uncover this strength, and so forth. I'm going to go ahead and leave it at that, and have a great week trading.